Hello, traders. We had an eventful week behind us. Thanks to the RBI monetary policy, the index has now gone back, knocking the doors of 25,000. In the past, it had tried to breach that level. It managed, but it could not sustain. And so, going forward next week, the most important question is, will it be able to sustain or not? So let's take a look at the Nifty, let's take a look at the sectors, let's add the dash of RRG graphs with them and try and figure out how we should position ourselves for the week ahead. All right, so here we are. This is the usual Nifty weekly and daily dual time frame. I'm using I'm using our usual Heiken Ashi charts along with the next price indicator and the RSI indicators. You might be surprised to see that I have the volumes plotted on my charts. This is primarily coming out from a discussion that we had in our next live session last week, wherein we are looking to look at volumes or consider volumes from the point of view of cash market breakout trades. That's not the agenda of this video. Let's straight away get into the analysis of the charts. First and foremost, the weekly time frame has been in a positive momentum, positive trend, steady move up. And with last week's move, we have a classic HHGB, which is a sign of consolidation. If you zoom in close to these weekly highs, you will see four shadows, and it's giving us this clear signs of resistance, which can turn out to be a resistance breakout. Positive chart, yes, this is a bullish positive chart on my left hand side. So strategically, from a weekly point of view, one should stay bullish. Coming down to the daily time frame on my right hand side, and you will see over here range bound price activity. This is what led to the recent degree of frustration, especially if you're a short term trader. The structure, the trend is still okay. It's the momentum which had kind of cooled off. That's because it has gone range bound. And with Friday's move, the index is back to, as I said, knocking that 25,000 mark. 25,000 was knocked and breached multiple times in the recent past during this range bound activity, but it could never confidently break and stay above 25,000 for, let's say, a couple of consecutive days. It slipped. So the $1,000,000 question going forward next week, will it slip this time as well? Let's take a look at the elements on the charts. The momentum is still down. The structure is still positive. Heiken Ashi is not completely positive yet. So the daily charts, I wouldn't say is very, very bullish, but it's also not very bearish. There are no signs of negative Heikens or a pullback or things like that. So the ideal thing will be you have an event which helped the market scale above 25,000. That was the last trading session. It was a 252 points gainer for the Nifty spot, 1% move. So I think it makes sense that you allow the index to cool off for a day or two and just check whether it can sustain more or less near that 25,000 mark or not. Essentially, what I'm trying to say is gather some breath and then give that breakout. So from the Nifty point of view, it is a bullish chart, especially clearly bullish chart on the weekly time frame. And we should be looking for some consolidation and then the move ahead. Are there any signs of momentum slowdown or bearishness or something that we should be aware of or we should be careful about, cautious about? No. So strategically, view is bullish. Now, before we go straight away to the sectoral charts, it is important to discuss the role, the participation from the mid and small caps in the recent market's move. You will recall that it was the Bank Nifty and the CNX Finance which had held a new life high recently, just I think 3-4 weeks back, a month back. But looking at the mid cap and the small cap, it clearly shows how close they have come to their respective all-time highs. And it's very likely, looking at the price behavior, that these charts will do their best to reach an all-time high soon. It's not a bad sign. You've got some participation from the broader markets. We would love to see some participation coming in from the other sectors as well, especially IT. But nevertheless, the mid and small caps, both the CNX mid and small cap, both the charts are pretty well established on the weekly as well as the daily time frame. You will notice that they did not do any kind of time pass which the Nifty did recently. And so they have pretty well established and they are on a positive trajectory. Yes, they are a little stretched, so they may decide to cool off, the small caps especially. Small caps will not add a lot of weightage to the Nifty, so that's why I said it's extremely important to see that once these, let's say, small and mid caps slows down, will we see some large caps picking up or not? Because that's what matters to the Nifty the most. But nevertheless, always a good sign to see that the broader markets are participating. Now going back to the Nifty spot chart, and from this particular low, that's exactly the kind of the counts that I've done in my weekly analysis for our RRG graph. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, around 12 weeks, right? So let's go to RRG graph. I'm using the strike analytics page. I'm going to use CNX Nifty 500 as my benchmark. I'm going to change the time frame to weekly. I'm going to increase the count from 5 to around 12. Is that okay? Now fit these. I have deselected the small cap, mid cap, MNC, mid cap 50, 100 and all those. I'm going to main focus is going to be the core sectors. All right, so I had to just refresh my page and get the RRG graphs in place for you. Let's sort in terms of the percentage change in the leading quadrant. You have the biggest gainer coming in from the Nifty PSU Bank. And in the leading quadrant, we have the oil and gas as well. So let's take a look at the Nifty PSU Bank. The RRG graph looks very encouraging. It is on the leading quadrant. It is gaining distance from left to right as well as down to up a little bit, which means that it's gaining relative strength and it's also gaining momentum of that strength. If we now take a look at our CNX PSU Bank individual chart, you'll find a pretty good looking weekly chart. No problem going back to that 7,200 levels, which was back around in December 24. Daily charts will be a little stretched, little tired, but it's trying to do a catch-up game. Now, this is where we will have to bring in Bank Nifty, the private banking chart as well. You see, the CNX PSU Bank is over here. Its respective life high was somewhere up there. Now, let's take a look at the Bank Nifty. The Bank Nifty is at an all-time high. The Bank Nifty hit an all-time high around 4 to 5 weeks back, a month back. I did tell you sometime. And during that period, the CNX Finance had also hit an all-time high, and it's also currently at an all-time high. So which means that the Bank Nifty's breakout a month and 1 week back was led by the private sector banks. But since then, the private sector banks have not done much. It's the PSU Bank which has done a catch-up game. Overall, it has benefited the Bank Nifty. Overall, the financials have been benefited. This is a good news for the market. Why? Because this is a sector which enjoys the maximum weightage. I always say this. It's always a good thing to see that the banks and the financial leading from the fund. So going back to the RRG graphs, the PSU Bank is positioned really well. So we should be curious to know that where is the Bank Nifty? The Bank Nifty is here. Where is the private bank? The private bank is also behaving like this. And where is the CNX Finance? The CNX Finance is exactly here. So you'll see the Bank Nifty is losing vertical distance. So is the private bank and so is the CNX Finance. But their positioning where they are at the current juncture is significantly away from the 0 point, which means they have enough relative strength. It's just that the relative strength's momentum is slowing down. So with that thought from the RRG graph, if we take a look at the Bank Nifty, strong charts, yes, they had gone kind of choppy range bound and finally has given us that breakout. So bullish, yes, definitely across both the time frames. So the Bank Nifty, the private bank, the CNX Finance, and of course the PSU Bank, which is doing a catch-up game, the entire pack is in a bullish quadrant, or should I say, is relatively stronger pocket, and one should maintain to buy on dip or look to trade the breakout. Long bias, bottom line. You should not be looking to short them just because they have gone up, right? So Bank Nifty, we did this in our last week analysis. I'm going to mark these, flag them. I'm going to unflag the rest so that we can start flagging the Bank Nifty, the CNX Finance, the PSU Bank, and the private sector banks, marking them all green. All right, let's go back to the RRG graph and now take a look at who's there in the weakening quadrant. Of course, we have taken a look at these three, and those are the three which are there in the weakening quadrant. What about the lagging quadrant? Because that's quite a few names over there. IT. And you can see where IT stands from the 0 point. It is the weakest sector and it's gaining some momentum. It's trying to gain some momentum. If we take a look at the CNX IT chart, and we will see a downtrending situation which is giving you a bounce back. The momentum is trying to improve from the weekly point of view. Heiken and Ashes did improve, and you've got a consolidation bar, which we like to call an HAGB. If I take a look at the daily time frame with this, I get a feel that flaggish kind of a behavior, not bad. Now, this is going to turn out to be a make or break. And I think IT is going to play a role. It should play a role. And for the week ahead or weeks ahead, couple of weeks maybe, this sector is going to give you a move. That is certain. You can use the weekly high and the weekly low as the breakdown points. The only important thing in these kind of situation is we should get a follow-through breakout or a follow-through breakdown. Then it gives the chance to a short-term trader to actually act upon it. That if I see the IT broke below last week's low, and let's say you go short on the pack and it follows through for a week or two, then it makes sense. You get a directional move and you make a buck out of it. But then if it breaks the low and then it bounces back and breaks the high, then you get both the directional breakout and actually you get stopped out. That's your outside bar, right? But nevertheless, what will happen that I don't know, but it's definitely going to give you a move. The close is near the highest point of the week, so we are very likely to get a follow-through move. So keep an eye on the IT pack. I would say cautiously bullish, turn bearish below last week's low. All right. IT enjoys the second maximum weightage after the bank, so it is an important sector. How should we flag this? From the weekly point of view, it is definitely improving. It's not bearish completely. We're looking for a make or break. So I'm going to unflag it. I'm not going to flag it. Okay. We can flag some green, some blue and all. If you want, we can add a new color to ourselves. Let's say a blue, which is a make or break, whichever way. Okay. I will rather use yellow in line with our HHG. Sorry for that. The other sectors which are there in the lagging quadrant, and something that we should definitely discuss, is the healthcare and pharma. And what is so important about it? It's been traveling right to left, and we've been talking about this week after week. The RRG graph traveling right to left is losing relative strength. The RRG graph losing a little bit of angle on the downside is losing momentum of the relative strength. The RRG graph is telling us this is a weak sector, or it is weakening. The internals are weakening. If you get a short setup, if you're into the trading shorts side of the market, look for shorts, stay away, do not go long. That's what the RRG graph is telling us. With that in mind, if we take a look at the CNX Pharma, what we see on the weekly time frame is definitely a clear sign of multiple resistances getting created, right? And it's not able to break out, and it's kind of gone range bound, creating some kind of a biggish symmetrical triangular formation. So yes, for multiple days and multiple weeks, it has kind of underperformed. So we understand why the RRG graph is traveling from right to left. Okay, that's fine. Is it a bullish chart? It's a volatile chart. It's cautiously bullish, I would definitely say, because my indicators, my Heiken ashes are predominantly on the bullish side. We are looking for this kind of a breakout. So it's cautiously bullish. Are there any signs of bearishness? Not really. Not on the weekly, not on the daily. So we should mark it green. Now, this is contradicting to the view from the RRG. The RRG is telling us not to go long. And, it makes sense that you just unflag it and do not do anything. Why? Because we should prefer to see a positive, then a pullback and the breakout, something like that happening on the weekly charts also. So it makes sense to give some credit to the RRG graph and just wait out a little bit. So I would suggest stay away from the pharma pack the next week. What about the others? Then you have the FMCG and the consumer durable. Now, FMCG, to be honest, if you take a look at where it is and how it is, in a very short span of time, it's in a very small range. It's not like the IT traveling all the way from here to all the way here, or the banks losing their vertical distance. FMCG is right there and it's within a very narrow range, very close to the 0 point. It's very difficult to say that it actually does not enjoy much of a relative strength or weakness. Neither is it relatively strong nor is it relatively weak. And it doesn't have that momentum either. So RRG graph is not going to give us much clarity. If we pinpoint exactly where you are and what does it mean? It means weakness. It's losing vertical distance, it's losing a little bit of right to left, so it's weakness. If that's the case, can we go to the CNX FMCG chart and take a look at it? The weekly has completely gone range bound. You can see that. The daily is angling down. The daily trend momentum is down. So there is definitely signs of weakness from the daily time frame. From the weekly time frame, the Heiken Ashi has turned negative. Nothing much from the trend and momentums. It's kind of jumbled up, mixed up with a predominantly weak bias. So I'm going to mark this red because of the RRG, of the daily charts reading, and the fact that I have a negative Heiken on the weekly. And if we zoom in on the weekly or on the daily, you will clearly see that this is the breakdown zone. This is the area. So FMCG, I wouldn't suggest to go long. No, stay away if you're a long only trader. If you are into derivatives, you can look for that breakdown. What about consumer durables? Is consumer durables looking better? So consumer durables is gaining vertical distance, but it's still in the lagging quadrant. Let's see if there's sign of improvement from the Nifty consumer durables or not. Weekly chart, clearly a negative Heiken to begin with, and a bit of directional improvement, very similar to FMCG. But FMCG had that 4-5 week of range bound activity, which consumer durables don't seem to have that. Daily trend, momentum down, pullback. So this chart also giving me predominantly negative readings. Weekly breakdown, weekly low breakdown can trigger fresh downsides. So I'm going to mark consumer durables also red. Both FMCG and consumer durables from the charts point of view, as well as from the RRG graphs point of view, kind of merge. So it makes sense, which we could not when it came to pharma and healthcare. Nevertheless, the last sector which is there in the lagging quadrant is Nifty metal. And we can see this clearly right to left, up to down. So RRG graph showing us that the internals are weakening. If the internals are weakening for metals vis-a-vis CNX 500, how does the chart look like? The chart looks like a stellar positive chart across both the weekly daily. No signs of weakness, which price is kind of showing us. No. Weekly, strong trend, momentum, HHGB, all ready for this breakout. Daily has moved up very sharply to go back to, giving you this breakout. Strong move coming in last Friday, almost 2% gainer, positive. I wouldn't chase this chart if you ask me from the daily time frame. But is it a bullish chart? Yes. Strategy, look for long trades. Do not look for short trades if you're in the FNO trader. So metals, I'm going to mark this green. Sorry for that. Metals, I'm going to mark this green. All right. Now the improving quadrant. And in the improving quadrant, we have the energy, which is essentially Nifty. Oil and gas and energy have a lot of overlapping names. We've discussed this. It's a sign of strength. Not too sure if we discussed this. No, we've not. Okay. After the PSU Bank, I missed out. Sorry for that. So oil and gas, take a look at oil and gas and energy. Now these two pack more or less has a lot of overlapping names. Left to right is sign of relative strength, gaining relative strength. Up to down, a little bit of loss of momentum. You'll see that in oil and gas also, left to right. So based on the RRG graphs, this pack should give us a strong chart, which is slowing down. And any kind of breakout, we should be looking to buy. Should be a bullish chart. CNX Energy, weekly, yes, yes, yes. On the verge of that consolidation breakout, yes, it is. Daily chart looks okay. Maybe pattern traders would like to say, hey, listen, there's kind of an head and shoulder shaping up, is it? Maybe, maybe not. Is it a bullish chart? Answer is yes. Can someone look to trade the breakout on the upside, continuation of the trend? Yes, why not? Are there any signs of divergence or momentum slowdown? No, not really. So let's mark this green, and this is also bullish sector. Yeah, I missed this out, but thankfully we've covered it. Now, leaving the rest of today's analysis to the reality and auto. Auto is an important sector, but auto has been struggling from improving to lagging, from lagging to improving. So it's just kind of hovering in this area. Positioning of the RRG is not that great, relatively weak. Momentum is picking up. Let's see if the chart makes any sense or not. Makes sense. You've got a decent directional clarity, momentum clarity, couple of weeks of consolidation. All that you need is a breakout. You've got a retracement. Structure is positive. Momentum had slowed down. Icons, if they improve, definitely you can see some upsides. Is this a bullish chart? Weekly, definitely yes. Daily, improving chart. Are there any signs of weakness on the weekly or daily? No. What can lead to signs of weakness? Only sub last week's low. Till that happens, look for long trades. So auto goes green. All right. And finally, we have the reality. Now, reality had improved the max when it comes to the vertical distance. And now when it comes to price, reality was a stellar of a move last week, and it has given one of the fantastic sharp recovery in this recent, I would say, 4 to 5 week period. Very strong weekly chart, very strong daily chart. I was using a phrase that too late to go long and too early to go short. Well, it's just kind of extended thanks to the monetary policy. Very little can be done from a trading perspective. From an investor's point of view, you can always add and add at higher levels, etc. But from a trader's point of view, with a better risk-reward ratio and a smaller stop loss, it's difficult to find any opportunity in this pocket. So I'm going to leave it unmarked. It's positive, but I'm not going to chase any trades here. So I'm not going to flag reality just because of the fact that just doesn't make sense. We have unflagged pharma because we would like to give it some time. IT is the most important sector to look out for, make or break. Two sectors which are still struggling is the FMCG and consumer durables. Rest of them are all green, and accordingly, you should position yourself for the week ahead. I hope you had a decent week that just gone by. And let's prepare well for the week ahead. The most important thing is 25K breakout. Which sector, which stocks lead that breakout, and how well do we see a sustained close? Do we get a weekly close above 25K? If we get this next weekend, I think we will soon start to talk about the Nifty going back to an all-time high. Hopefully that happens. I hope you've enjoyed your weekend. Thank you everyone for following my work. Take care of yourselves. Goodbye.